Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about gold. Now, as usual, to keep the video as educational as possible, first, I'll give you the technical aspect for this market. Then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders. And then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows with a very strong bullish trend, and all this push to the upside is fueled by strong institutional buying, which is something that we will speak about in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that here in the monthly, we are in a strong uptrend, and that all this uptrend is coming as a rejection away from a quite important break, retest, and rejection to the upside of a historical structure level. In fact, this zone was acting as previous resistance, preceding all these rejections to the downside, and then the market managed to break above the zone with this impulse. Now, what we know is that in the market, if there is a previous level of resistance, which throughout the years has been respected as resistance in many occasions, and the market then manages to break above that zone, what you expect after the break to the upside is for all that previous resistance to become support. So what you expect after that is a retest of that previous resistance turn support, and then to see a rejection to the upside away from the area. So what you expect here is the break, retest, and rejection to the upside, which is in fact exactly what the market did. After breaking it to the upside, the market retested the level right here and respected it as support and started that massive push to the upside with institutional longing, as we have just spoken about. Now, if we zoom into the most recent price action, what we can notice is that last month, the month closed with this candle here. Now, when you see a candle like this, essentially with a green body and a very long wick, what you expect after that is for the market, the next candle, essentially, what you expect from the next candle is to fill in the wick. Because usually what this means is that if you have this candle here on the monthly, on the weekly time frame, for example, or anyway on the daily time frame, so on lower time frames than the monthly, you will see an impulse and a correction, in which the correction is exactly the wick that we see here on the monthly. And usually in an uptrend, after an impulse and correction, what you expect? You expect a continuation to the upside. So the next impulse to the upside, which is in fact exactly what fills in the wick. And so far, that is exactly what we're seeing. We're seeing the push to the upside this month already filling in the wick of the previous month. Just a quick interruption, let me know in the comments below if you have any new pairs or topics that you would like me to cover in the next videos, because I'm always open to suggestions. Dropping down on the weekly, what do we see? Now here in the weekly, we see exactly what we expected. We can notice the impulse, the correction, and in this case, the correction is exactly that wick that we see on the weekly time frame. And at the moment, what we could expect is more bullish continuation. What we can also notice is that all this push to the upside, all this impulse phase to the upside comes after the market has essentially broken out from an ascending triangle formation or pattern. What we can notice, in fact, here is that we had a very popular pattern, which is, in fact, as I was just saying, an ascending triangle formation, in which you see equal highs created at a specific level of resistance, and at the same time, the market is also creating higher lows. Now, when you see higher lows and equal highs at the same time, at some point you usually expect a breakout to the upside, and when that breakout happens, you usually see a massive push to the upside, which is in fact exactly what we're seeing right now. Now, what we can also notice is as we have an impulse and correction, if you want to measure the correction after the impulse, you have to take your Fibonacci from the low to the high of the impulse leg. And what we can notice is that we had a correction to the 0.32 and 50% retracements, which create a strong level of confluence of support from which there is good probability of seeing a potential rejection to the upside. Dropping down on the daily time frame, what do we see? Now, here on the daily, I did speak about gold just a few days ago when the market was at this level. I spoke about all the reasons for which I was expecting a rejection to the upside away from this level, and in fact, that is exactly what the market just did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what do we have? Well, before we dig deeper here on the technical aspect of this market, first, let's go and see what we have when it comes to the commitment of traders. So what the big players, so institutions in the market are doing. Now, let's keep in mind that the US government is currently in a shutdown. So we are missing the very last few reports because obviously we're not getting the new reports until the government will be in shutdown. Now, the shutdown should end very soon. In fact, it is already in the process of being reopened again. Therefore, we will get new data very soon, possibly even this Friday. But what we can do is, since institutions take a lot of time to actually shift their orders because they have such large orders that they don't have enough liquidity at a specific moment in the market to just immediately change their positioning, their shifting of positioning is spread throughout time, very often over months. What we can try to understand here is what was the trend, how the institutions were already shifting their orders before we stopped getting the data. And if we do that, the result is very clear. Institutions were increasing their net positions, so moving to the bullish side for gold, going from 161k net positions with 238k longs compared to 76k shorts, all the way up to now having 266k net positions with 332k longs and only 66k shorts. So institutions were longing gold very aggressively, therefore making it stronger. So let's keep that in mind and move back here to the chart. So in a situation like this, first of all, let's identify structure. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now, back to the analysis. So here on the daily, first of all, let's identify structure. Now, what we can notice here is that this level was quite important. This was the previous level of support, turn resistance here, which is now again acting as support here. What we can also notice is that as we have an impulse and we want to measure a potential correction, if the market from here will move lower, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.32 and 50% retracements lining up exactly inside of this support zone. Now, this creates confluence of support inside of this level, which means that if the market will retrace to this zone, there is good probability of seeing more institutional buying inside of this area, further increasing the probabilities of a potential push higher away from the zone. So if the market will correct to this area, what would I expect? Well, as usual, and as my students already know, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection higher away from this area, for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.